Today we're diving into Nuvama Wealth Management, a major player in India's booming financial scene. This isn't a buy call, it's your crash course on a company at the heart of India's wealth explosion. Nuvama spun off from Edelweiss in 2023 and now serves everyone from billionaires to regular investors. Their business stands on three legs: wealth management for the ultra-rich, asset management for the masses, and capital markets for institutions. This diversification gives them stability and reach in a rapidly growing market. Nuvama's reputation and deep network make them a go-to for India's new millionaires. They're not a startup, they're a seasoned top-tier firm with serious momentum. But does the hype match the numbers? Let's find out. Time for the numbers. In FY24, Nuvama pulled in Rs 263 crores in revenue and Rs 608 crores in profit after tax. Their return on equity? A stellar 26%, a sign of smart, efficient management. Cost-to-income ratio sits at 58%, reasonable for a firm investing in growth. The stock soared after its debut, pushing valuations sky high, sometimes dangerously so. At its peak, the price-to-earnings ratio was well above peers, leaving no room for error. One big risk: promoter shares are heavily pledged as loan collateral. If the stock drops, forced selling could follow, adding volatility. These are the facts you need to know before getting swept up in the excitement. High growth, high risk. Classic story. Now let's talk about the controversy that shook things up. Buckle up. Early 2024 brought trouble. SEBI accused Nuvama's client, Jane Street, of manipulative trading, dragging Nuvama into the mess. The market panicked, the stock tanked. Investors feared fines, reputational damage, even license loss. Nuvama's response: "We acted in good faith and will fight this." The potential penalty? Up to Rs 100 crores. A hit, but not a knockout for a profitable firm. The bigger worry: trust and reputation. Can Nuvama move past this and regain confidence? Despite the drama, India's wealth boom is a powerful tailwind for Nuvama. Their three-division model creates a flywheel. Clients move between services, deepening relationships. Nuvama is expanding into mass affluent markets in smaller cities, chasing untapped growth. Heavy investment in tech means they're ready for the digital future. Macro trends, rising incomes, pro-growth policies, and a shift to financial assets are all in their favor. As India's wealth rises, so does Nuvama's opportunity. They're not just riding the wave, they're building the surfboard. But every wave has risks. Don't ignore the risks. Regulation is a constant threat. Rules can change overnight. The Jane Street episode proved how fast sentiment can turn. Valuation remains high. Any stumble could send the stock tumbling. The promoter pledge is a sword hanging over the stock. Forced selling risk is real. And remember, Nuvama's fortunes rise and fall with the market. Bull runs are great, but bear markets hurt. Bottom line, Nuvama is a top-tier player in a booming market, but it's not risk-free. Weigh the growth story against the real dangers. This isn't a recommendation, just your homework. Make your move wisely.